Mangalam Maloo. Well, just want to point out before we get to the markets, we have macro data on our hands. We have the WPI data for the month of December, which is out, and it is more than what at least the street had anticipated, or maybe a couple of estimates. So it's coming at around 0.73%. It is versus 0.26% on a month-on-month basis. So yes, there is hardening which has taken place. The street was working with maybe estimates of around 0.6%. So there is a little bit of hardening versus what at least the street was anticipating. Now, one of the main reasons for that, as you can see on your screen briefly, is food inflation, which has hardened this time round for the WPI, and that has come in at above 5%. And that was one of the key trends that we in fact did see within the CPI data as well this time round. It came in at around 8.7% or thereabout. Primary articles inflation has come in at around 5.78%, and food inflation, like I just mentioned, has come in at around 5.39%. Remember that the inflation data, core inflation data, is what we will be awaiting, the WPI data. It is expected to probably see still be in contraction territory. That's what at least economists are expecting. So let's see what that delivers. Manufactured product inflation is in deflational, is a deflationary trajectory. So minus 0.7% is what you can see for manufactured products. We do have Latha with us. Latha, take us through the data. It is a little more than I think what the street was anticipating.
Well, actually, I got an average of about 1%. In fact, there were quite a few readings at 1.3 and 1.6% in terms of expectations. We must remember that we have been having a very low WPI for a pretty long time. So now the base will start reacting, and you are going to get a 1%, 2% inflation going forward, because we have had deep negative numbers even from a year ago level. For instance, this is the first 1% we are getting, I think, after, a near 1% we are getting after probably 10, 11 months. We've had such deep cuts in wholesale price index. I don't have the entire 12-month chart in front of me, but I can tell you just for the last 6 months, the overall inflation has been minus 4.8, minus 1.2, minus 0.6. So, you know, when you're that deeply in the negative, at some point in time, you will start getting positive WPI numbers simply because of the base. You must also remember that as we get towards the month of March and April, it's the year ago we had the war impact as well, the Ukraine war. So you will start to see a great deal of base effect happening. But important to note that this inflation is not to be read as very high at all. In fact, the market will continue to read it as a very benign wholesale price index. The 0.9, the December WPI number, all commodity index, is actually down 0.9% on the month. That is very important. Month on month, you're not seeing an increase. You're only seeing a year-on-year increase of 0.73%. But just reading a little bit more, manufactured products, minus 0.7 even now, and it was minus 0.6 in the month of November. So year on year, again, prices have fallen on a wholesale manufactured products basis. Fuel prices, again, minus 2.4. Primary articles inflation is the only one which is showing some inflation. That's 5.8%. And that's largely because, as you pointed out, food inflation coming in at 5.4%. Even this is cooling compared to the previous month, compared to November. We have Suvodeep Rakshit, the senior economist of Kotak Institutional Equities, joining us. Suvodeep, what have you made of these numbers at 0.73? Is it lower than what you all were estimating, higher, and your overall take?
Good afternoon, Latha. Yes, in fact, I was looking at around close to 1.5%. And I think it's much lower on two counts. One is on the manufacturing side, the contraction is a little more than what I was expecting. And on the food side, I think it's slightly lower than what we were expecting. In fact, it was the same in terms of food and the CPI also. But broadly, if you look at the numbers, I think it's not yet in a zone where, you know, we should be worrying about whether it's very high inflation coming back on, you know, in terms of wholesale prices starting to inch up again. A lot of it is to do with the base effect, as you already talked about. If you look at December last year, there was actually quite a high contraction on a month-on-month basis, which translates usually into an adverse base effect. And that has kind of propped up the WPI inflation in December. So it's not a bad number at all. In fact, 0.7, I think, compared to the consensus, will be below the consensus. So something that, if you look at
least it's
CPI,
below, no, I take your point. It's below my consensus,
Yeah.
Suvodeep. My consensus was running close to 1%. And I had 3 or 4 readings well above 1% as well, including yours. So it's certainly come in below expectations. Vegetables, for instance, month on month is a 12% fall. And, big wholesale contributors like potatoes, minus 9%, onions, minus 20.9%. So all this is contributing to a lower than expected food inflation as well. Food inflation is higher if you look at the other ingredients, other components, but it is lower than what it was in November. So this will be seen positively. So, Suvodeep, what is the trajectory going forward? What would your, for instance, WPI be for the next year? For FY25, is it some decent 5%, or does it continue to be a low single digit?
Yeah, I mean, see, the inflation will continue to go up. It just base effects as well as some normalization in prices that we are seeing. So inflation will continue to inch up. The pace of increase might not be too high for the next 6 months. But once you go on into, let's say, somewhere around May, June, I think the increases become material in terms of the year-on-year inflation. So I think somewhere between 1 to 2% is what my trajectory would look like till around April, May. And then I think we start hitting some of the 4 to 5% marks in June, July, and then possibly stabilize around the 4.5%. So if I were to look at FY25, of course, we'll have to do some revisions after the print today, but average would be somewhere around, I think, 4 to 4.5%.
Okay. So that will still mean perhaps, a depressing effect on the nominal GDP. Suvodeep, just a final question. We've got this CPI number, which has come in lower than expected at 5.69% on Friday, compared to widespread expectations of 5.9. Are you all expecting the Reserve Bank to change their stance sometime soon? I got at least 2 reports, one from Citi and one from ISEC PD, saying that they are expecting the Reserve Bank. There is a chance the Reserve Bank will advance its change in stance to February itself. What are your thoughts?
No, we are still sticking to a first quarter FY25, which effectively means sometime in April or June. I think it's a bit too early for the central bank, especially somebody who has been focused on the 4% target for so long. And I think they have talked about it. So I think the point is that they will be kind of looking at the liquidity, the stance, give it some more time, and then possibly kind of change the stance. So I stick to our view that we'll possibly see a change of stance in sometime in April or June policy.
All right. Thank you very much, Suvodeep, for joining us with your initial thoughts on the WPI index. Actually, the manufactured products index is still pretty weak. If you look at the entire list, almost every item is minus, even on a month-on-month basis. Of course, it's, say, for instance, vegetable oils, edible oils, which is a manufactured product, minus 16% year-on-year and minus 1% month-on-month. And even if you come to the bigger contributors like basic metals, that's down it's minus 1%, 1.06 to be precise, month-on-month. Mild steel, minus 0.5% month-on-month, and of course, minus 3-4% year-on-year. So large number of manufactured products still very low, which explains why the core inflation on Friday came in at 3.9, below 4%, below the index of the given mandate of the Reserve Bank. Let me just disconnect and now come back to the bond yields.